are checking and savings accounts, right? So those are probably the most common accounts that you can have when you open a bank account, right? So what is the difference between the two, right? So checking accounts are basically a type of bank account designed to help people keep their money safe while giving them easy access to the funds via either a regular deposit and withdrawal transactions. So money in, money out, and easy to be able to use that money to pay for any expenses that you have, right? Whereas a savings account is a secure place to keep your money while still being able to access it easily, right? So also, this account helps you to be able to put money aside for a specific purchase that you're wanting to do in the future, or to be able to save for a rainy day, right? That's the idea for savings accounts, is that you want to make sure that you're putting money aside so that if an emergency were to occur later on, that you can go into your savings and be able to pay whatever it is that you need. Or if you're looking to save for maybe, I don't know, let's say that you're looking to do a spring break trip and you're wanting to save money for that, then a savings account would be a great way to do that as well. But we'll talk a bit more about that in just a minute. So checking accounts, right? So with the checking account, you can use checks. And I know what you're thinking, who still uses checks? But checks are actually safer to carry than cash, right? Because if someone steals your wallet, you lose your cash, and it's not replaceable, right? Whereas if your checks were stolen, you can put a stop payment can be placed on your checking account, and then you'll get reimbursed whatever was stolen. But it's not easy to be able to use a check to get money out of your account, right? But listen, a lot of us don't use checks. I really don't. I can use it once or twice a year, to be honest with you. But I think it's important for you to understand, because some, like, for example, maybe my homeowners association only takes checks. So I need to write a check for that. Or when I'm paying my taxes at the end of the year, maybe I write a check to them. Or any taxes, state taxes that I have as well. So those are usually the times that I write checks. But for the most part, I use my debit card or my credit card to make any purchases. And we'll go into the details on some of those cards that are available for you. But I wanted to make sure that you understood what a checking account was and how checks can be beneficial to you if you're needing to use those as well. So deposits, right? So the thing with banks is that you're able to deposit money into the bank, right? So maybe for your birthday, you got a lot of cash, or maybe when you graduated high school, you got a good lump sum of money. And you're like, what am I going to do with this money? Then maybe you want to open a bank account and make a deposit, right? And it's very simple. You can make deposits using your pre-printed slips that you receive along with your checks, if that's one way of doing it. Or you can use a blank deposit form that you can easily get from your bank as well. Deposits can be made in person, through a teller at your bank, or you can do it through an ATM machine or direct deposit, which is a payment option where your funds are electronically transferred from your checking or savings account. And there's also online or mobile deposits where you can actually use your camera on your phone by taking a photo of the front and back of the check to make your deposit. And that's usually what I do. Whenever I get a check, I don't want to go to the bank and have to go through the line or go inside the bank. I use Chase Bank, for example. So all I do is when I get a check, I endorse it in the back, and we'll talk about that in a minute. And then I'm able to take a picture of the front of it, the back of it, and then it gets deposited. And then I kind of wait a few days to make sure that it went through. And if it does, then I void it and tear it up and shred it. So that no one has access to it as well. But that's an easy way of making deposits for any money that you have. So, listen, you're probably thinking, why do I need to know about checks? But it can be important that you may actually write a check at some point. Maybe your apartment, you need to give a check to start off with, right? So I want to make sure that you understand how to write a check, right? I want to point out the number at the top right corner of the check. You see that 1025? The check number is for your record keeping only, but is incredibly useful when reconciling any outstanding checks, and is very helpful in balancing your checkbook as well, right? I know you have checkbooks, you can do everything online, but as old folks back in the day, this is how we used to do it. But there's other ways of doing this, but I just want to make sure that you knew what that number stood for, right? That's specific to that check number, and you can trace it back, right? So now let's talk about how to write a check. You will start by dating the check on the upper right-hand corner. You're going to put the date that, that date that you're writing the check. And then number 2 that you see there, page of the order, who are you writing this check to, right? Is it that you're paying your rent for your apartment? Then you're going to put the name of the person that needs to go to. And then for number 3, you're going to put the dollar amount. So maybe your rent is $850, so you would put $850 there. And then number 4, what you're going to do there is that you're going to write out the amount that you're going to be given. So that $850, you're going to write it out. $850, right? And then the memo, you can use that to kind of give you a background or a summary of what you're using this for. So on that memo, if I'm writing it for rent, then I would just write on the rent so that I know exactly what I used it for. And then number 6, this is where you're going to sign your check, right? This is your signature that you're going to put. But it's that easy. But I wanted to make sure that you understood this because you may have to write a check at some point in time, that you want to make sure that you understand what that is. So how do you cash a check, right? So before you deposit the check, you're going to need to sign it or endorse it with your signature on the back of the check. So when you flip over the check, it'll show you that says endorse. And there's usually a line with a little X to put your signature. So if you're having to deposit a check, you're going to have to sign it and endorse it on the back. And then most checks will have some sort of direction, like endorse check here, followed by a line, like I said. And make sure your signature matches what is on the payee line, right? So make sure that it's the same name that you're writing in there. And only endorse a check when you're ready to deposit it, because if you lose the check and have already signed it, someone can cash it on your behalf. So be very careful with that. So if you're not ready to deposit it, then just wait. And then when you are, then sign it and then go ahead and deposit it. You can also add for deposit only, and that way your money will go directly into your account, right, and no one else's. Mobile deposits, which is pretty common, and many new personal checks have an area to check if it's a mobile deposit, as well as the ability to identify the institution that the funds are being deposited to. And it's important to know that even with mobile deposits, the check still has sensitive information on it, like the account holder name, the address, account number, and the routing number. So let me just kind of tell you about that, right? So look at this check. So usually these, I don't know if you see those zeros at the bottom. Maybe I have a little highlighter here. Let me do that. This section here of the check, that's usually either the bank account number and then the routing number, right? So these are numbers that the banks use to be able to understand that this is going directly to your account and this is the routing number that it's using. But I want to make sure that you understood that as well. But basically, that's how easy it is to cash a check. It's very simple. And like I told you, most banks are able to do that on your phone. Take a picture of it, front and back, after you've endorsed it, and it should be deposited within 24 hours. Overdrafts, this is important, right? So you only have how much you have in your account. So if you overdraft, meaning that you get more than what's in your account, then that is an overdraft, right? It's important to always know your account balance to avoid any of these overdrafts. An overdraft is when you don't have enough money in your account to cover your transaction, but the bank pays the transaction for you. But you may be charged a fee because of that, right? So something to think about is make sure you always know the terms of your accounts, because like I mentioned to you, there may be some extra fees for things like a minimum balance, maximum number of transactions per month that you can have, or any other fees associated with the account, right? So make sure, like we talked in the beginning, what are some of those fees that may be assessed on this account moving forward that cause an overdraft situation simply because you may not have been expecting those charges and may not have enough money in your account to cover your bills, right? So make sure that you know how much is going in and how much is going out so that you're not overdrafted. This causes you to have insufficient funds, right? Bounce checks and bounce transactions. So fees can be charged for each return check, and the average fee is usually about $35 per transaction, so that can add up pretty quickly. So you want to make sure, again, you understand what is in your account, what is your balance, and what is having to be paid from that, and that there's enough money there so that overdrafts should not occur. A debit card. So this is something maybe that you already have, and maybe you're part of your mom or dad's account as well, and they're going to provide you these debit cards where you can use it to help pay for any meals on campus or purchase books or whatever the case may be, right? So debit card basically takes money for the purchase directly from your checking account, right? Transactions can be denied if there's not enough money in the account, so make sure again that you have enough money in the account. And it can be used at most ATM to withdraw cash, right? So I always encourage you to go to the bank that you bank with, because that way they don't charge you any fees. It's free, but if you go to a other bank that has an ATM, they may charge you a servicing fee. So make sure that you understand that. And then with the debit card, you're given a PIN number, right? So that PIN number is what you're going to use to be able to take money out of that account. So you want to make sure that you keep that in a safe place and that you remember what that PIN number is. And I always also encourage you too that if you're going to ATMs, just make sure that it hasn't been tampered with, right? That it doesn't look like someone has changed it up a bit or has access. And sometimes they're able to change where you put your card in, that little device, they can replace it with something else. So you just want to make sure that it looks legitimate and that it hasn't been tampered with at all. And then check your transactions regularly online or through your bank application, right? Because you want to make sure that you can see your charge that you've made, but maybe there's a charge that's on there that you're like, I never made this charge, and why is that? So you can keep track of that with your online transactions. So this chart provides you information on your liability if you have reported the issue immediately to your bank or your credit union, right? So basically, before any unauthorized transactions are made, $0, right? Within 2 business days after you learn about the loss or theft, it could be $50. More than 2 business days after you learn about the loss or the theft, but less than 60 calendar days, it could be up to $500, right? Anything 60 and over could be possibly unlimited, right? So if your debit card were to get stolen, you want to make sure that you contact your bank so that they cancel it and reissue a new one, so that no one is using your debit card and taking your money out, right? So you want to make sure that once that occurs, that you immediately contact your bank so that they can put a stop to that transaction. So savings account. So let's talk a little bit about that, right? And this is important because I think everyone should have a savings account and put money aside as you go. But basically, this is an account that allows you to deposit your money securely, right? It pays a modest amount of interest on money in your account. So basically, if you're putting, let's say, $1,000 in there, so it can accrue because it's gaining interest in the account, right? The interest rate depends on economic conditions and your bank's desire to compete with other banks. So it can be high, it can be medium, depending on your risk levels as well. But you can definitely speak with your bank to see what those interest rates are and then how much money that can generate for you in a period of time. Savings account rates are usually not very high, may not even match inflation, and a little bit of interest is better than nothing at all, right? So why just keep your money in an account that's not growing any money? At least there's a little bit of growth being done in the savings account while you're there, right? And then savings accounts are federally insured for $250,000, so you will not lose your money if the bank fails. So there's always been concerns, well, what happens if the bank closes and my money's in their account, so do I lose my money? So if you have less than $250,000 in your account, then you're secure enough to know that your money is secure and that you'll be refunded if your bank were to close down. So your money is easy to access at any time, and really it's a safe place to store money and to help you save for future investments or future things that you want to purchase as well. So ATMs, we talked a little bit about that, right? So what are ATMs? So it basically allows you to have access to your money 24/7. So you'll find that banks have ATMs all across the city that you're in, and you can use that to be able to put in your debit card, put your PIN number, and take whatever money that you need, right? Again, you're gonna need your PIN number to be able to access any money from your account. And then the other thing too is that fees are associated, which we talked about this, right? So hopefully your bank has several ATMs across the city that you live in, but if not, then maybe there's another ATM, but they may be going to charge you a fee as well. But it's an easy way to be able to get money in, and some of them you're able to deposit through ATM as well. Money, if you have money that you want to deposit, you're sometimes able to do it through ATM machines as well. But again, it's just an easy access of your money that you can take out at any point in time, 24/7. Usually there's a limit of how much you can take out in a day. It could be $500 to $800 depending on your bank. But if you're needing a large amount of cash, more than $500 or $800, then you're gonna have to go into the bank to go to get that withdrawn. And then other banking services that are pretty common, right? So this includes mobile banking. Basically, this is through your mobile device or your iPad. That's the way that I do it. I think that's the majority of people do it as well. I have an application for Chase. I click on it, do my face identification, and then it gives me all my accounts all in one place. Online banking, you can do it through your laptop very easily. Safety deposit boxes, this is where you can store something of value like jewelry or bonds or any important documents that you have. You can put those in the safe deposit box at a bank. Trust services, this is a little different. This is for you wanting to put money aside for a beneficiary. So maybe in the future that you're going to have children that you want to leave some money behind for them, that you open a trust for them so that when you're long and gone, there's money in there for them, and that you put requirements for them to be able to take that money at a certain period of time. And then U.S. saving bonds, this is a government security that's offered to help fund federal spending and provide savers with a modest return, right? So there's some saving bonds you can do. You put the money in there for a period of time, and it grows some money based on federal spending. And then educational programs, and then certified checks, cashier checks, and traveler's checks. These are usually common when you're traveling or you're vacationing outside of the country. These are the kind of checks that you want to have because it's still money accessible to you, but you usually use this when you're vacationing outside of the U.S. So why should you save some money? So listen, it's always important to save some money. Any little bit helps to do that, and I encourage you to save money as you go, right? I know you're in college now, and your income is probably very limited, if anything at all, but it's always good to put a little money aside for a rainy day, right? For things like emergencies, right? Things happen in life that are unexpected. Saving small amounts of money regularly can really help you to help save some money along the way. Everyone has emergencies and that come up from time to time, and having that extra cash can really be a great benefit, right? So maybe one of your tires gets flat and you need to replace that tire, and you do not have the savings to be able to do that. This is one way of doing that, right? So that you're putting money aside for a rainy day. You also want to save money for expensive things, right? We all have major purchases that come up throughout the lifetime for things like maybe you want to buy a car. Maybe you're looking to do a trip. Maybe you're ready after college to go buy a home. So, or maybe you want to put a deposit on that dream apartment that you're wanting, right? So these are things that you want to consider and be able to save for because those things are pretty expensive. So you want to make sure that there's some savings there for any deposits that you may have to do for an apartment, a home, a car, or whatever the case may be. And then goals. Maybe you have goals. And I always encourage you to set goals when you're saving money, right? I talked to you about earlier about maybe for next March or April during spring break, I really want to go to, I don't know, Cancun or Florida. But that's going to cost you some money. So maybe my goal is from today on, I want to save some money aside so that I have enough money to pay for my expenses, for my flight, or whatever the case may be, so that you're able to plan ahead, set a goal, and have some money saved up so you can be able to pay for that goal that you're wanting to do. So again, make sure that you're setting money aside for those high-priced things that you want. Start first by setting up your bank account and create your savings goal. That's going to be the starting point, right? Making sure that you do have a bank account and that you have a savings account where you can start saving for that goal that you're wanting. You want to consider what amount is realistic for you to save regularly, right? So if you don't have a lot of income coming in, then maybe you can't save a whole lot of money, but maybe you can put aside maybe $10 a day, right? Or a week, I should say. And that's kind of maybe a little bit more manageable. You can arrange for a contribution from a paycheck to go directly into your savings account, either on a monthly basis or bi-weekly basis. And this is what I do too, because I'm not really good about putting money aside automatically. So what I do is when my check comes in, and it comes in every 2 weeks, I set a certain amount to go directly to my savings account. That way it's out of sight, out of mind. And then when I go to my bank, I'm like, oh wow, I didn't realize I've already saved this much money because I have that saved and I'm not really paying attention to it, which is good. Because that way it doesn't tempt me to want to go and use that money and make purchases, right? So there's just easy things that you can do to start saving some money. And we know it's difficult to save for many reasons. You want what you want right now, and I get it, right? That new PlayStation comes out, and you're like, I really want it, but do you really need it right now, right? Can we save some money so that we can kind of plan ahead for that as well? You realize you have money saved, and then you spend it on something you haven't planned on spending on it, right? Ladies, you see a pair of shoes that you like, oh gosh, I'm in love with these shoes, I have to have those today, and then you spend your money, right? Instead of saving some of that money. You have other needs that prevent you from savings, right? So again, it takes discipline to be able to put money aside, but it's really important that you do that for the different reasons that we talked about earlier, for emergency purposes, or maybe saving for a goal that you're wanting to do. So just make sure that if you're able to put some money aside, even from your loans or any financial aid that you're getting while you're in college, if you have a refund, maybe put some of that money aside and put into savings so that you can save some of that to help you pay for other expenses that may come about for college as well. But the idea here is just to start now, to start saving some money, either for the future or for a goal that you have. So let's look at this example, right? So if you save $10 a week for 10 years at a 3% rate of return, how much is that going to be? It's going to be $6,062.20, right? So that's great, right? Because it's a little bit amount of money, and you're not touching it, and it stays there, and it's growing at a 3% rate, then you have some good cash there ready to help you for a rainy day or for that goal that you're wanting to do as well, right? Of course, the more money you put in, the more savings you'll have, but $10 a week is manageable, so it does add up. So again, any little bit that you're able to put aside, that's what we want you to do. So we get this question a lot about, well, what is the difference between a debit card, a credit card, and a prepaid card, right? So cash, you can always use cash to pay your expenses, but there are other variable options that are available for you too, right? So let's get right into, debit cards and what that is, right? Again, this provides you with access to money that's in your account. If you don't have money in your account, you won't be able to use your debit card, right? So if you've already maxed out your account and you go up to purchase, it won't allow you to purchase because you don't have enough funds in there, right? So that's a good safety mechanism that's there for your debit cards, right? If you use your debit card, you can also use a PIN, which we talked about, that personal identification number that's going to be given to you. And you can use it at ATMs that we talked about or at stores as well. It's just an extra level of security to be able to do that with your PIN number. You can also use your debit card without a PIN by signing the receipt like you would like with a credit card. But debit cards do not impact your credit score because you're using your own money. That's the big difference between the debit card and a credit card. The debit card is your own money, whereas a credit card, that is credit. That's someone else's money that you're using, right? So let's get into credit cards. which is different. Credit is money that is lent to you that you have to pay back over time plus interest, right? Credit allows you to buy something now and pay for it later. That's how that works, right? If there's available funds, because there's usually a maximum amount that you can get in credit cards, right? Meaning you haven't charged up to your credit limit is what that means. If there's still credit available on your card, you'll be able to utilize your card. So for example, if you have $1,000 credit limit and you have already charged $1,000 on your card, you're not going to be able to charge anything else until you pay down that balance, right? So similar to a debit card, if your account is at zero, you won't be able to use your debit card. Same thing with the credit card. If your account is already to the max, you won't be able to do any purchases because you're already up to the max, right? If you don't pay off the entire balance when you receive your monthly statement, you're going to pay interest on top of the money that you borrowed. So credit cards do have an impact on your credit score, right? Where debit cards, it doesn't affect your credit score. Credit cards are definitely going to do that. So if you're late in making payments on your credit card, or if you're going over your limit and you're not paying the maximum amount at the end of the month, that will affect your credit. So you want to make sure that you understand the differences, right? And if you do have a credit card, then you use it wisely. And then prepaid cards are very different from credit cards and can be confusing because both types of cards, they have a card network logo such as Visa, MasterCard, American Express, or a Discover card itself. Some things to know about prepaid card is that it's reloadable and allows you to add more money on the card at any time. A lot of you, I would suspect, probably have prepaid cards that mom and dad have provided for you, that they can put money in there and then you can use it to go make any purchases that you're needing for college, right? So some things to know about prepaid card is that it's reloadable. And allows you to have more money onto the card at any time. So, and I'm sure this happens, that you're running low and you're having to call mom and dad and say, hey, I'm at $20 and I need some more cash here to pay whatever expenses that you may have, right? And there are two types of prepaid cards, including an open loop prepaid card and a closed loop prepaid card. So what's the difference between the two? An open loop prepaid card, is a card with the network logo on it. For example, we talked about Visa, MasterCard, American Express, and Discover. Those are the network logo cards. So those are usually open loop prepaid cards. These cards can be used at any location that accepts that card type, right? So you can use it basically anywhere where Visa, MasterCards are accepted. Whereas a closed loop prepaid card, it's a card you can only use at certain locations. So for example, a closed loop card may be good only at specific stores or a group of stores or on your public transportation system, right? So that's a big difference, right? So if you have that Visa logo or the MasterCard, American Express, or Discover, those are open loop prepaid cards. You can use that anywhere where those are accepted. Whereas closed loop prepaid cards, those you can only use at specific areas or specific stores. Again, for example, public transportation system that may have those kind of cards. There are different types of fees on prepaid cards. You want to make sure that you understand that, right? Different prepaid cards charge different types and amount of fees. So some common fees that you'll find on prepaid cards could be monthly usage, transaction or purchase fee, in-network, out-of-network ATM withdrawal fees, ATM balance inquiry fees. So if you're on the ATM and you want to know how much you still have a balance, they may charge you a fee for that. To reload cash on the card, there could be a fee for that. There could be a customer service fee. So again, there's a variety of different fees that may be added. So you just want to make sure you understand what those fees are. And even though people use these cards, many don't fully understand the terms, the interest rates, or the other charges. So that's why you really want to make sure that you have a good understanding of what fees are all involved on any of these cards, whether it be a debit card, a credit card, or a prepaid card as well. All right, so just some quick basics here before we finish off here. So it's important to know APRs. And what is an APR? Well, what does it stand for? It's basically annual percentage rate. This is the annual rate of interest that's going to be charged to borrowers. You also want to know your credit limit. What is that amount so that you don't exceed that limit? What are the fees and penalties on that card? So for example, Will they charge you a fee for exceeding your credit limit? When will they bill you, and when do they expect payment to be made, right? So that's important. Is there a specific date that you have to pay this, and how much do I have to pay? And will there be a rate increase, right? So sometimes credit cards offer you an introductory rate, maybe a low rate for 12 months. And then after 12 months, it's going to go up to 12 or 13%. So you want to make sure what that is so that there are no surprises. So you want to make sure that you're reading the fine print. I'll tell you that when I was in college, I was getting solicited for a lot of credit cards. And I thought it was so easy just to sign up because I was getting approved for like $500. I was like, wow, this is great. And then I'm using it for things and I'm buying stuff. And then you have to realize you have to pay this back. So you can really get in trouble with some of these credit cards if you're not able to pay it back. So just be very careful with credit cards. I definitely recommend you sticking with debit cards while you're in college, and the prepaid cards are available for you. But if you are a disciplined student that can use a credit card, then this is an option for you as well. But this would be the last resort that I would use because some of those rates can be really, really high. So a credit card interest can add up pretty quickly, right? Something may seem like a great deal because it's on sale, but if you have to pay it off over time, you will have interest accruing, making that item such a great deal anymore, right? So listen, if you buy a big purchase, interest is going to accrue on that. So if you don't pay it off by the end of the month, interest is going to compound on that as well. And what is compounding interest? This means that you're paying interest upon interest. So think of it kind of a snowball rolling down a hill. It gets larger and larger as it starts going down that hill. So let's look at this example that we put on here on the slide. If you have a debt of, let's say, $100, and it accrues 10% interest every month, then the first month you're going to be charged $10, right? So then it becomes $110 that you're going to owe. The second month, you're again charged 10% interest, which this time comes out to $11. So you know that now you owe $121. And that's how interest is compounded and can add up pretty quickly. So if you're using credit cards, and listen, I use them because I like the points that they give me, right? Because I do a lot of traveling. And I want to be able to use those points to buy airfare or hotels or the case may be. But I, at the end of the month, pay off my credit card every month. Whatever the balance is, I pay it off. Because if you don't, interest is going to be compounded, and then that amount is going to increase every month if I don't pay the full amount. And if you're just paying the minimum amount, interest is still accruing on that as well. So again, this is kind of the last resort if you need a credit card, but these are some of the things that you want to consider when looking at credit cards. So listen, it's essential that you understand your credit card, right? And what it offers and what it provides. So let's review the little things that we talked about just now. So credit cards aren't using your money. We're using the credit card issuer's money, right? So whoever issued you that credit card, you're using their money. You can charge up to the limit set by the card issuer. If you don't pay off your entire credit balance when the bill is due, you're going to be charged interest. And remember that the larger the balance you carry, the more you're going to pay in interest, as the example that I gave you earlier, right? So the difference, again, between debit cards, credit cards, and prepaid cards that we discussed. So the debit card provides you access to your own money. These cards are connected directly to your bank account, either your checking or savings account, where a credit card provides you access to borrowed money, and a prepaid card provides you access to money that has been loaded to the card on your behalf. So think like gift cards as well. Those are considered prepaid cards as well. A credit card can be one of the fastest ways to build up good credit, right? But if you don't use it responsibly, you can really get in a lot of trouble, like I mentioned to you, right? So the good thing, the only positive thing about a credit card is that it is credit-based, so that if you're paying your credit card at the end of the month to the full balance, and you're on time in making those payments, it really helps you to start building your credit as you go, right? So these are things that you want to consider. And then a few things too about payment history accounts for about, I want to say about 35% of your credit score, right? So if you miss payments or you're regularly late, that can really drag down your credit score. So again, these are all credit related. And credit is going to be very important to you after you graduate, or even in college too, because if you're wanting an apartment, they're going to do a credit check to see if you have credit established and how good is your credit. When you're wanting to buy that car, they're going to check your credit to see how good your credit is. So again, you want to make sure that you're very careful with these credit cards and that you're paying these off at the end of the month every time. So let me give you some resources that I think can be very helpful to you. So Smarty Pig, I don't know if you guys have ever seen Smarty Pig, but go to smartypig.com because this will help you to start saving money. It's free service, but you're able to put money in an account and you can plan for things, right? So maybe you're planning a trip to spring break. You can start planning it online and putting money aside. Maybe you're planning to buy a car in a year. Then you can start saying, okay, this is how much it costs. How much can I put money now? And in a year, how much will I have to pay for that car, right? Maybe a big deposit on that car. So these are really great resources available to you. And we also have some other resources, like there's a lot of calculators available for you as well to kind of plan ahead for that maybe dream vacation that you're wanting to have, purchasing that car, and your life journey, right? Because right now, maybe you're so concerned about, maybe I want to do study abroad, that you're saving for that, right? But then after college, you want to buy a home, or you want to buy a car. And then maybe later on, you're not thinking this far ahead, but maybe you want to have a family and get married. How much is that going to cost you? So basically, you're able to do all that here through these Smarty Pig resources that are available for you as well. But listen, I've covered quite a bit of information here, so I wanted to make sure that we left enough time to answer any questions that you may have about banking or savings or credit cards. So any questions at all that you have for me on the subject that we talked about today?
Questions?
Sherry, there we are.
I guess I have one.
Yes.
Any questions?
What's your question?
What about IRAs and Roth IRAs?
Did you hear her?
No, I didn't.
What about IRAs and what?
Roth IRAs.
Roth IRAs.
Yeah, no, this is great. So this is, you can definitely use these. If you have money that you're wanting to invest, you just want to make sure that you're speaking to your bank and you're considering all the different options available for you. IRA may be a good option, Roth could be a good option. But listen, once you put these in the account, it's not touchable for a period of time. So if you're going to need this money sooner than later, then maybe that's not the best option because there may be some penalties in you taking out that money. But those are great for you to either use for retirement or to save money for a long period of time so that maybe you have a big purchase that you want to do and use that money to pay for what you're trying to do. But those are good accounts. But I definitely recommend you to speak to your bank associate and understand all the different options you have to be able to save some money.
Any other questions?
Any other questions or anyone online that have questions?
And maybe I'll just make a comment.
Feel free to unmute yourself.
Oh, yes, we have a
And ask the
comment.
question.
I have a
Yeah.
comment. Just a reminder that school debt, school loan debt does not get wiped out if you go to bankruptcy court, right? So I think people need to know that.
I don't think you can.
She couldn't have heard that.
Okay,
What was the comment?
bankruptcy is,
If
you
you
want to
go
come down there
bankrupt, your
and say
school
it?
loans aren't waived.
Yeah.
If you go bankrupt, your school loans aren't waived.
So your federal loans that you borrow, if you are borrowing federal loans and you file for bankruptcy, those loans don't go away. That is correct. They will be with you until the very end. And you know, I should backtrack because there's two ways that you can get rid of these loans, right? They're not the best ways, but there are two ways. One is that you die, and the other one is that you become totally and permanently disabled. Again, not the best options, but those are the only ways that these loans go away. But I will tell you that if you have difficulties paying back your loans, or maybe you become unemployed, or whatever the case may be, contact your servicer, your lender, and let them know that you're having difficulties. And if so, they can help you by either doing a deferment or forbearance or finding a different repayment plan for you to make it more manageable. But if you're having troubles, keep in contact with your servicer and or lender.
Yes, sir.
Any other questions?
Any questions on the chat?
I don't see any.
Yeah, I don't see anything either.
No. All right. Well, thank you so much, Sergio. I really appreciate it.
You're welcome anytime. I hope this was helpful for you all, and definitely consider saving some money now. Even if it's something small or something big that you're wanting to do, any little bit helps to put some money aside, especially for a rainy day, because things happen and you want to make sure that you're prepared.
Yes, sir. Perfect.
All right. Well, thank you, Stephanie, so
Thank
much
you.
for the invite.